At Crypto Insider, we cut through the noise to focus on what truly matters, especially in the SEC versus Ripple saga. Lately, the real story isn't on social media or in price charts, but in the subtle shifts within legal filings. Quiet procedural moves and joint scheduling requests suggest a new phase: cooperation, not conflict. When legal adversaries start agreeing on small things, it often signals bigger negotiations happening behind closed doors. This matters for XRP and the entire crypto ecosystem. The SEC's lawsuit, filed in December 2020, cast a shadow over Ripple and XRP, leading to delistings and uncertainty. Now, signs of a possible resolution could redefine crypto regulation in the US. Unlike market rumors, legal filings are binding and carry real consequences. A joint motion in court is a formal signal of mutual intent, often a precursor to settlement talks. Seasoned legal analysts know the most important moves are often the quietest. The real story is in the precise technical language of court documents. That's where the future of XRP, and perhaps crypto regulation, will be decided. To understand today's developments, let's revisit the SEC's lawsuit against Ripple. The SEC claimed Ripple's XRP sales were unregistered securities offerings, putting the entire crypto market on edge. The pivotal moment came in July 2023, when Judge Analisa Torres issued a nuanced ruling. She found Ripple's institutional sales of XRP were securities transactions, a win for the SEC. But she also ruled that XRP itself isn't inherently a security, and secondary market sales to retail buyers weren't securities transactions, a huge win for Ripple and crypto at large. This distinction set a precedent. The context of a sale matters more than the asset itself. The ruling gave legal clarity, prompting major exchanges to relist XRP. The case didn't end there, but the battlefield shifted, giving Ripple leverage in negotiations. The outcome now has implications for every digital asset operating in regulatory gray areas. The fight over institutional sales and penalties continues, but the landscape has fundamentally changed. Most high-stakes legal battles in America end not with a dramatic verdict, but with a settlement. Settlements save time, money, and uncertainty for both sides. In the SEC vs. Ripple case, the July 2023 ruling shifted leverage. Ripple gained ground, and the SEC faced new risks. Now, both parties have incentives to negotiate. The SEC can claim a partial win. Ripple avoids a drawn-out fight. Settlement terms are meticulously negotiated, covering fines, business practices, and, crucially, language. Ripple's lawyers will push to avoid any admission of wrongdoing. The SEC will want to frame the outcome as a victory. The final agreement's wording will shape Ripple's future and set a precedent for the industry. These negotiations are happening quietly, far from the public eye. The outcome will impact not just Ripple, but the regulatory approach to crypto in the US. The real drama is in the details of the settlement, not the headlines. In legal settlements, every word is a battleground. For XRP holders, the settlement's language will determine not just Ripple's penalty, but XRP's legal status. A settlement where Ripple pays a fine without admitting guilt is standard, and favorable for XRP's future. But if Ripple must acknowledge past institutional sales as securities, the impact is more nuanced. The key is limiting any admission to specific historical transactions, not XRP itself. This distinction protects secondary market trading and future utility. Legal analysts will scrutinize every phrase for its implications. If the SEC concedes even implicitly that secondary market sales aren't securities, it's a major win. Harsh language or restrictions could dampen optimism. The real work begins when the settlement text is released. Every word will matter for XRP and the broader market. Removing legal uncertainty is a powerful catalyst for any asset. For years, XRP was delisted from major US exchanges, not for technical reasons but due to regulatory risk. The July 2023 ruling gave exchanges the legal cover to relist XRP, restoring access for millions. A formal settlement would be the final step, ending the debate over XRP's status for good. This would likely trigger relistings on any remaining platforms and open the door for institutional products, like custody services and ETFs. Institutional access is key for large-scale capital and long-term growth. As legal uncertainty fades, the market reevaluates XRP's potential. Increased liquidity and new products make the market more efficient and attractive. A settlement would fundamentally change XRP's risk profile, allowing it to be judged on its merits. The value of XRP is tied not just to its technology, but to its regulatory clarity. The market is already pricing in the shift. For XRP, a settlement isn't just news, it's a new beginning. The legal chains are coming off, and the market is taking notice. The SEC versus Ripple case is a US battle, but its impact is global. Regulators worldwide are watching, as the US often sets the tone for financial rules. A clear settlement will serve as a reference for policymakers from Europe to Asia. For multinational banks, regulatory clarity in the US is essential for global adoption. The uncertainty around XRP has stalled its use in cross-border payments, even where it's already legal. A US settlement would remove a major obstacle for global integration. Countries like Switzerland, Singapore, and Japan already treat XRP as a currency, not a security. A US resolution would harmonize global standards and accelerate partnerships. The outcome will influence how digital assets are regulated worldwide. If the SEC concedes on secondary market sales, it signals a shift toward a more balanced, innovation-friendly approach. Other countries may follow, fostering a global standard for crypto. The end of this case is a pivotal moment for international digital finance. It's not just an American story, it's a global turning point. As we approach a possible resolution, it's vital to stay informed and measured. The real story isn't in daily price swings, but in the legal and structural changes underway. XRP's journey highlights the importance of regulatory clarity for the entire industry. The distinction between institutional and secondary sales is now a key legal precedent. For investors, the focus should be on understanding implications, not predicting dates. Do your research, follow credible analysis, and recognize how legal clarity changes an asset's value. The market is already looking ahead to a future where XRP is unchained from legal risk. Crypto Insider will keep you updated with clear, hype-free insights. The SEC versus Ripple case is about more than one token. It's about the maturation of an industry. Stay aware, think critically, and be ready for what comes next.